A very good evening, everyone. Thank you once again for joining us tonight as we talk again another financial literacy session. My name is Immaculate Businje, and it is always a pleasure to be here learning together, exploring topics, touching topics that benefits us as a community. Tonight's topic is one of a kind as well. It is understanding the power of financial security, this time from a perspective of life insurance. This session is going to cover a few questions that we have been getting from our audience. Every time we educate, every Thursday again, we do have these sessions, different topics, and we get feedbacks from our audience. And it is from these feedbacks that we always come back to touch on them, to elaborate on them, and to make sure that we really understand everything that we learn. So the questions we're going to cover today are why financial security matters to everyone. In that regard, why is life insurance beneficial, or why does it matter to everyone? How life insurance benefits you, or how does it benefit me? Why everyone needs life insurance? How much of it do we need? Do we all need the same amount? Or is there actually a need for a different person? So before we get into the real discussion, again, we are going to first see what is financial security. When you ask yourself when you look at this topic, understanding the power of financial security, what comes to your mind? What is it? So I was looking up the definition. It says financial security is the state of having stable and sufficient financial resources to cover our current and future needs. Those needs, as we know, they may be food, shelter, healthcare, emergencies, savings that can take you up to 6 months, up to a year, if a rainy day comes. So tonight, we're going to tackle that. Those financial securities, are we financially secure? Are our families financially secure? So to help me go through these questions that were asked by our audience, I have a presentation that we're going to actually go through together. Again, these sessions are meant to be interactive. We're supposed to come here to learn together. It is not a classroom. It is supposed to be an interactive session whereby we all come together to learn together, to contribute to something that is important to us as a community, as a people. So I'll go ahead and share, but I will ask everyone to hold on to your questions, or maybe what you need to add at the end of the session. Jot down everything you need, or you can actually start sending your questions, your comments into the chat so that we can be able to actually follow through with everything that we need to learn tonight. Thank you. I'll go ahead and start sharing my session for tonight. As we're saying, tonight's session, every Thursday, 8 p.m. Central Time, we have this topic. We have different topics in regards to financial literacy, where we come together to learn about those issues, about what we can actually do together to solve our financial issues. So we are going to learn together here to try to navigate and see how together we can tackle everything that we want to learn together. Let me know, everybody, if you actually seeing what we're doing before we go. So the topic tonight is actually called the ABCs of life insurance. ABCs meaning life insurance 101. Meaning that sometimes we take life insurance to be something very strange, very like out of this world. But we want to actually take it back to 101. What is it that life insurance that can actually take us to that financial security? When we look at the ABCs of life insurance, it is showing us the comprehensive guide to understanding the life insurance in general that has a multi-purpose financial planning tool designed to provide a family security that we're talking about and protect our financial future. Again, we're going to look at, again, what is it? What is that life insurance? When people talk about life insurance, we now, because we discuss it more often, it has become something that, I've heard about it. But do you really understand what it is? Do you take it to heart to understand whether you need it? And if you do, what kind do you need? What does it do for you? And if you do have one, what kind do you have? What benefits does it give to you? When we look at this, what is the life insurance? It is showing us it is a multi-purpose financial tool that actually gives us different benefits, family protection, living benefits that are designed to help protect ourselves or person's financial security while we're still living. So normally what people are used to about life insurance is that actually that protection you get, actually you don't get it. People are used to those ones whereby you get a policy, you protect yourself, and when you're gone, your family is going to benefit from it. But today's life insurance that we talk about, which is why it says it provides that financial security, you can actually benefit from it. They tell you it is designed to protect a person's financial security while alive. That means living benefits, meaning that you can actually benefit from your financial protection or your life insurance while you're living. You may ask, how? How is that possible? Today's life insurance, as I was saying, you're protected when you get sick. For example, you get a critical illness, you get a terminal illness, you get a chronic illness, and you're not able to go to work. That product, that life insurance is going to come to your rescue to protect yourself, your family, and your finances while you're still living. So why? We go back to that question as someone asked, why life insurance matters. We all have financial vulnerability if we are not protected. So we are told here by numbers, nearly 70% of households with children under 18 would be in financial jeopardy if a primary breadwinner dies. Just go back a little bit. Imagine you have a family. That whole family depends on you, relies on you financially for everything, for their shelter, for their food, for their education, for their healthcare, for their everything. They're just, those kids are looking up to you for everything. What happens if, God forbid, you happen to die? The breadwinner happens to die. Without that financial protection, without that life insurance, how are your family going to survive? They're telling us here, life insurance provides a crucial safety net for families, ensuring financial stability continues even after the loss of a primary income earner. Who wouldn't want that? We know it is very hard. It is very sad to lose a family member, maybe to lose a father, to lose a mother. It is hard and very actually heartbreaking, but it's even harder when you lose a family member and that family member goes with everything that you depended on. And that is why this life insurance is actually powerful. It helps you to secure everything you really ever worked hard for, everything you ever wished for. You don't want to see your family suffering just because you did not take a step to protect that beautiful family of yours. We go to another question. How life insurance benefits you? There are so many ways life insurance can benefit you. Again, death benefit for your family. Let me say, for a small amount of money, now you can put down $100, $50, $200. Your family will get a whole lot later. That is what we call financial planning. This protects your family's financial future when you're no longer there to provide. We need to plant that seed today, a family financial planning today, so that if anything was to happen tomorrow, or even if nothing happens, you need to save. You need some savings. Just in case you get sick, you need to make sure that your back is covered, your family is covered, yourself, you are covered. Because when you get sick and you don't go to work, those bills are not going to stop. Those medical bills are not going to stop. The family bills are not going to stop. But if you are protected, that is, we call that financial security that you have, knowing that if anything was to ever happen, my back is covered. I'm not going to have any issue. Number two, that peace of mind again, knowing your family will be financially secure, provides invariable peace of mind throughout your life. Even if you get sick, even if you're to go, everyone will go at one point. But how are you going to go? What kind of legacy are you going to leave behind? Are you going to leave your children actually floating in debts? Are you going to go and your children are going to be putting out a GoFundMe, even just to put you to rest? Are they going to be thrown out of the house or out of the schools just because you did not plan? I don't think so, because we are people who work hard for our families, for ourselves. So family planning, financial planning, it is very, very crucial for all of us. Then that family protection again. Everything rotates about that family safety. It doesn't benefit if you don't care what happens to your family upon your death. Let me say someone, I've had some clients who tell you, you know what, I never had a life insurance. My parents never got me any. So if I go, my children will suffer. They can actually fend for themselves. This is what they're talking about. If you don't care, then this is not for you. But I believe everyone, not even a family member, not even a father or a mother, even yourself. We are here. We all work hard, be young or older. We work hard to make sure that our rain days are covered. If I get sick, I don't have to have children, but I still have to have a home to live in. I still have to eat. I still have to make sure that when I'm sick, my medical bills are covered. So that family protection, or even yourself, it is that benefit that life insurance brings to you or brings to me as a person. Again, we go ahead. That is the beautiful family. Again, we bring in of people with families. Reason is you might need life insurance. This is in details. Providing for families in the event of a premature death. Leaving a legacy for your family, charity, even schools. We have people maybe who don't even have children, but they love their churches, they have loved their schools, maybe they're educators, maybe they're pastors. They feel like this church has been depending on my financial support. Even when I'm gone, I need to leave that legacy behind, whereby I'm not going to leave a vacuum, but I'm going to plan to leave something that I have been contributing to, ensuring that your children have enough funds for college. College is getting expensive. It has been expensive, but even going in the future, it's going to be more expensive. That is where we bring those IUL for juveniles. Start planting the seeds for children today. Start planning for your children today, so that when they grow up, when they are going to college, you don't have to scrap your head saying that where am I getting the cash? Because money that we save, it is hardly enough to find enough money to put your children to college. But if you can plan ahead of time, it is very easy to manage. Paying estate taxes. Let me say you have taxes. You have some estates that you have a lot of taxes to. If you're gone, do you want to leave those taxes to your children or to your beneficiaries? You don't want to do that. So the other reasons of life insurance, you accumulate money for retirement. We know we work so hard. We have seen so many elderly working in their 90s, their 80s. It's not because they love work. It's because in their young ages, they forgot what is important. to plan for their future. Retirement may seem as it is so far away for now, but whether you're 20, whether you're 30, 40, 60, and 70 is going to come sooner than you think. So start planning now for your retirement before it approaches. Another great importance of life insurance is protection against outliving your retirement savings. We keep saying most of the time, for people who always join us for the financial literacy trainings on Thursdays, sometimes we actually go in to look into our retirement benefits or retirement resources that we do have here. There are so many retirement savings or plans we do have, but are you looking into yours? Is it something that is going to take you through your old age? Or do you need to diversify your options and find something like Index Universal Life Insurance, whereby your cash accumulation can take you through your old age with ease without having to worry that your money you have in your 401k or some little savings you have, you're going to outlive it. That is another great importance of having the life insurance with cash accumulation in it. Then inflation protection. Again, depending on the kind of insurance you have, like the Index Universal Life Insurance, it is able to help you protect you from inflation. Let me say you have money you have accumulated into your cash accumulation. The principal you have, whether the inflation goes up and down, your principal is now going to be touched like the money you have in your stock market. So all these we go through with you. If you need a specialized like session, we go through with you one-on-one to show you exactly what you can do to avoid those kind of issues like inflation or outliving your retirement savings. Another great reason or importance is having your money working for you because of a tax benefit. For people who understand better about how life insurance works, all the benefits, most benefits of life insurance are tax advantaged. So when someone dies and they have $1 million protection, the beneficiaries are going to get all the money tax-free. If you have your cash accumulation, they're also tax advantaged. So take advantage of some resources that are going to help you safeguard your savings. Some monies we do have, maybe like in 401k, it is a beautiful piece of saving as well. I'm not saying go stop it, but if you're no longer maybe working for company ABC and you're able to transfer your money where it can actually help you grow more money, avoiding taxes, move the money to accounts that can actually help you to safeguard or to minimize the taxation, because again, some accounts are you put in money pre-taxed as a seed. By the time you go to take out your proceeds, you taxed on a bigger chunk of a percentage. So let us go together, go closer to your financial professionals to get to know exactly how your money can work for you better. Another big question we always get as financial professionals is, how much life insurance do I need? And some people really think that life insurance is very expensive, not because maybe it is, but because we don't understand. So life insurance really, how much you need depends on your financial need. Every family is different. Every family's financial need is different. So it depends on your financial goals again. They tell you here, it depends on your goals. One rule of thumb though, we are told financially, you need at least to keep 5 to 7% times your gross annual income. Imagine if you're making 50,000 a year, make it 5 times or 7 times if you really want to make sure that you're financially safe in the future. If something goes to happen to you, you're going to be safe. So always don't live paycheck to paycheck. If you're living paycheck to paycheck, of which most of us are living, if that paycheck was to stop today, the next month, your mortgage or your rent is not going to be paid. So that is why financial security is very, very, very important. We make money, it doesn't matter how much it is. We always say financially, it is not about how much you make, it is about how much you're able to save or you're able to retain. Because if you're making 50,000 a year or 5,000 a month, and at the end of the month, you actually into negatives. Imagine if that check was to miss, if you're to get sick for 6 months. You're waiting on your check to pay your bills, to pay your rent, to pay your mortgage if you have a home, to eat, or to pay anything you need to pay. Imagine if that check was to stop. What happens to that family? What happens to you? So saving is very, very crucial. Live minimally now, so in the future you don't have actually to survive. Some people just want enough to cover last expenses, you know? Some people, if I need just a final expense, what I'm going to get, what I'm going to take into life insurance is going to be different from someone who needs maybe a retirement income. That is, for number one, they say, at least have a protection of 5 or 7 times what you make. If you're making 50,000, do times 7, and then get that kind of a protection or life insurance, so that if something is to happen, you're going to be able to be covered. Others want to leave a significant amount to their families or charity. You can imagine, all these reasons are different, meaning that everyone's financial need is different. And that is why when we meet our clients, when we meet our families, our communities, we sit and do what we call a needs analysis. Because my financial need and your financial need are always going to be different. So we educate here as a community, but when it comes to individual, we advise you reach out to a financial professional to give you a thorough one-on-one needs analysis to find out exactly what your finance or your financial needs are and how much you will need. Because again, to actually answer the question of whether life insurance is expensive, there is nothing as expensive as life. You may think what you're paying is expensive, but if you are to ever need that money, there is nothing that actually can replace that. So how do you calculate your insurance needs? Mostly when we're doing the analysis or the financial analysis or needs analysis of a client's need, we ask you, do you need to cover your final expenses? That is the funeral, medical, hospital expenses if you're sick. If someone is dying, obviously they might leave behind a big chunk of medical or hospital expenses, or even the final expenses, which are funerals. Do you have debts? Do you have any debts that you want to make sure that they are paid? Do you have a home? If you have a home and you're a parent, you have your wife, you have your children, you have your husband, they're living in the home, you are the one who has been paying a mortgage. If you're gone and that check is not coming, do you want to make sure that your life insurance covers your mortgage, covers your loan balances, covers your credit card balances, to make sure that your loved ones are not staying back floating in the debts? Do you have children? Are your children planning to go to college in the future? Future college and education expenses. Those are the needs you put in mind when you actually ask yourself, how much of a life insurance do I need? You also want to think about your family income needs, annual income requirements for your family. If you have been bringing in 200,000, 100,000, and you're gone, maybe the family is going to survive for more 30 or 40 years. What is it needed? What do you need to make sure when you leave it behind, your family has actually that financial security, you're not just going with what you had? Do you have legal costs? Do you have any state probate costs and attorney fees that you need to make sure they're taken care of before you go? So the formula really of the formula is the current needs minus current life insurance and the liquid assets is going to be equal to the amount of life insurance you need, meaning that if you have any needs right now, you have those final expenses, outstanding debts, the future college education for your children, all those are the needs. Then if you actually take out what you have today in your savings account, let me say your needs are 500,000, but you only have 50,000, you're going to take the 500,000 minus the 50,000 you have. What is left is what you need, because you don't want to leave any of these issues to your family, or even when you're sick and you're there, you don't want to see yourself being bedridden and your family is already floating in debts. They are not able to go, the kids are not able to go to school. Your mortgage is not being able to be paid just because the planning is missing. Again, life insurance has those tax benefits we're talking about. So when we think about planning, when we think about the power of financial security, we also think about protecting what we have. You know, nobody wants to make money and then lose it. You don't want to lose anything. Nobody wants to lose any pen that they made. So how do you actually protect your money or benefit from the taxes? Instead of paying a tax, you actually earn the tax towards your money. So any additional is always good. We don't want to give out. We want to make sure that everything we have is actually a tax advantage. For example, when you have a life insurance, income tax-free death benefit, this, when you die, you're gone, your beneficiaries are going to receive the death benefit without paying any income tax. The reason being, when you put out your money, you're paying your premiums, all those premiums are coming out of after-tax money. So literally, life insurance is never taxed. Whether you have $1 million, whether you have 500,000, whether you have 2 million, everything you're going to leave behind when you're gone is going to go 100% to your beneficiaries without being taxed. Another advantage of life insurance with the tax, the income tax deferred interest accumulation. So you actually, when you're putting your money, the money that you're accumulating into your cash, the one you're growing, the cash value, it is actually tax deferred, allowing you for more efficient compounding growth. So if you want to understand how compounding works, when you put your money in life insurance, that is in index universal life insurance, you earn the interest on what you put in, plus even the money you have in, what we call principal, also earns a compounding interest. So you keep earning on everything. What you're putting in every month, what you already have in, keeps on compounding the interest. So because those taxes actually deferred, is helping you to earn more money. And when you take out the money, depending on how good you take it out, you're not going to actually incur taxes, as long as you speak to a financial professional who knows how you can actually do that. Don't take matters into your hands. There is a reason people are financial professionals. They are certified, they are educated to do that for you. Don't have to hustle with things that you don't know. If you're an engineer, you're a doctor, let financial professionals actually do their job to protect your finances. Again, we have the income tax-free distribution. Who doesn't want to save their money? And when you're taking it out, when your beneficiaries are taking it out, they are sure that actually their distribution is tax advantaged. You don't want to put money like we put money in a 401k, whereby you're not taxed when you put the seeds in, but when you're taking out the big chunk is being taxed. For index universal life, or most of the products you have in life insurance, you put in your after tax and your proceeds are going actually to be tax advantaged. There is nothing as good as that. So again, this is just overview. This is not explaining exactly how a tax deferral is done. It is not going in details how tax-free distribution is done. That is why we call upon everyone. Reach out to the financial professional to give you an individualized session to go through deeper into all the benefits we're discussing here, because this is just an overview. We won't have enough time to go into details, but that's why we're always here, to help, to learn together, so we can actually be able to benefit better. So when we talk about life insurance, people maybe other than the financial professionals, we take everything as just one umbrella. Life insurance have different types. So when we look at the two main types, the term life insurance and the permanent life, actually a good comparison here. If you have a term life insurance, it's like you're renting. Maybe you're renting your home, you're renting your apartment. This is a rental agreement. That is what you're renting it for 5 years, for 10 years, for 20, for 25 or 35. But after that agreement time is done, you're not insured. When you compare that to a permanent life insurance, look at that. You have your house deed. You bought your home, you own it. Would you rather rent or own? But they are all good though. We all start somewhere. We all start renting, and that renting is going to move us to actually owning our own homes. So let nobody tell you that all life insurance has to be permanent. Start with what you can afford. I tell people all these policies were put there for a reason, for the purpose. They are all good, depending on what your needs are. Again, the needs analysis we're talking about. If you need a protection for a short time, if you need just to cover your final expenses, or you want to maybe have a policy that takes you in 20 years or 25 when you're done with your mortgage, the term life is good for you, because for one, it is not going to cost you much. But at the end of its life, it is going to be gone. So let's look in details. I'll try to summarize a little bit so we can go into the Q&A so we can be able to actually discuss better. But keep in mind, the term life, you're renting; the permanent life, you owning. You're owning yourself for life. You covered it for the rest of your life. The other one, you're renting it because at the end of the day, you're going to give back the rental to the owner. Let's see a few bullets here about term life. What does it come with? Protection for a specified period we're talking about, 10, 20, 30. Some policies we have, actually, they go up to 35. They pay only for protection against death. No, actually, the ones we have now, we have also the death benefit, and actually, they also come with living benefits. So no cash value accumulation, meaning that term life only protects you when you get sick, when you die, but you cannot save any money into that. So death benefit paid is paid if insured dies during the term. Remember, we have the term limits up to 35 or 30. If you get it today, and God forbid something happens to you after year 31, you're not going to get anything because your term has timed out. Premium remains level or can increase during the term. Most of the time, the products we do have, all of them, they stay level until the term of your insurance that you took. They can be renewed without additional underwriting, but at a higher cost. Some of the term life can be actually converted or can be renewed. But again, like we always educate our people, life insurance, whether term or whole life, they are cheaper with age. So if you took a policy of 30 years at year 30, after 30, you're going to be 60. If you're paying 50 now, you might end up paying 500 at age 60. So you don't want that. To avoid that, you need something that whereby you're able actually to lock in your premium today for the rest of your life, which we're going to see in a few slides ahead. So it's showing us that it can be more expensive if insured lives beyond the term period. We all pray to live a longer lives. Let me say, your policy ends at 60, you end up living at age 95. You have 35 years to live without coverage. And that is when the chronic illness starts kicking in, or other sicknesses starts kicking in. That is when you could have been able to access your living benefits if you did have the full coverage. So the permanent life insurance has different kinds, but we are going to focus mainly on one, but we can go a little bit into this. We have the whole life that is also part of permanent life insurance. This one is a traditional permanent insurance with guaranteed premiums, meaning that premiums don't go up and some cash value. Then we have the fixed universal life, fixed flexible premiums with guaranteed cash value growth in it. We have index universal life insurance, which links growth to market index performance with downside protection. We are going actually to look into this one like in details, so that we can try to catch the time, so we can go into Q&A. So index universal life, this is one of the products we actually love to educate to our people, because it has so many benefits anybody would actually love to have. So this one has similar features to those whole life, but it differs in a way that the fixed interest crediting option plus index crediting option, it has so many crediting options, whereby we're talking about the indexing options. So whereby you earn those compounding interests, it helps you to grow your money tremendously, and you covered for the rest of your life. This one participates in the percentage gain over market index, although you're not actually in the market directly. So it minimum interest guarantee when the market index has a loss. So with index here, we're talking about the gains of the cash accumulation. So the index universal life has a guarantee, what we call the floor rate, meaning that if the market was going up and then something happens, the market is going down, the client will never ever experience a loss. They have the floor rate, whereby it is actually guaranteed. So, and here they're telling us minimum interest guarantee can never be less than a zero. So we don't want anybody to get actually, that's why, because you're now losing money, it can never ever go into negatives. So again, they're telling you here, no negative interest crediting due to minimum interest rate guarantee. We have a guarantee. You're covered today when you get sick. When you get sick, you have the living benefits. When you die tomorrow, your family has tax-free death benefit. And when you live a long life, you're able actually to access your retirement benefit. So when we talk about understanding the power of financial security, what are our takeaways? Which actions do we want to take? We want to take action today, to secure our tomorrow. Why get a life insurance again? This is just like a summary. When you get your life insurance today, whichever age you are, that is your youngest self. If you're 10, if you're 20, you're not going to be 20 again. So today, get your policy today to lock in the low rates. Because if you're 15, if you're 20, if you're 50, that is the youngest you can ever be. And if you get a life insurance today, you're going to lock in the low rates that are not going to ever change until, if you took an index universal life that covers you up to 120, those rates will never ever change. You lock in everything. Protect your family and your future income. We all want to make sure that we are protected. Our finances, our families are protected for life. Grow your wealth tax-free and use it when needed. The money you grow under index universal life, you can actually draw your money at any time, as long as you have that cash accumulation. Use it to buy a home, use it to put your kids to school, use it to pay the debt, use it for anything that you want to do with it. Get living benefits for medical emergencies. We all know that people get sick. People get sick with cancer, with those critical and terminal illnesses. But even if you have the health insurance, they can never ever cover everything. And even if they cover the medical, they are not going to cover your mortgage. They are not going to cover your rent. They are not going to put food on the table. So those are the main reasons we have to take action to secure our families and our future. So if you're interested in knowing more, having more specialized and individualized sessions, we can be reached. We have the number here. We have the email. Feel free to reach out at any time for actually better sessions that benefits you, because again, every family, every individual's financial need is different. I think I'll go ahead and end here and welcome any questions, any support, like what you liked better or what you want to add, or if you have any questions, so we can go into the Q&A. The floor is open now. I will need to hear from you guys. Let's go in and learn together. You're welcome to contribute.
Hello, good evening.
Hello.
Yeah, those who don't know me, my name is Joshua. Thank you for inviting me to this conference so I can hear what they're talking about the life insurance. So what I wanted to ask is about the index. So in order to start investing in the compound index, what is the main requirements to enter? Are you supposed to also do a license, or because is it different from SP 500, or is something that is totally different from that? That's my question.
Thank you so much, Joshua, for that wonderful question. Yes. So to start actually getting your Index Universal Life, that is, I think, what you mean. To start a policy, really, you don't require to do a license, because a license is needed if you want to become a financial professional. But to protect yourself or protect your family, all you need is you. The willingness, knowing what you want, the premium. Maybe what is needed, I would say, is the premium to be able to pay for that policy. But you don't need a license to get protected, because there is a difference between a client or the insured and the agent. The agent is the one who needs a license to be able to sell life insurance. But if you need a product or protection, you don't need any license. You just need to get your protection actually done for you by a financial professional.
Okay, thank you. So another question is that, can you open an account without a professional broker?
That is another one again. So no, I would say no, because you have actually, because this is, as you can see, life insurance is actually very regulated. It is something that is done by someone who is licensed by the states. You have to be a financial professional who is licensed and allowed to sell these products. So no, you cannot actually do a policy for yourself. You have to reach out to someone who is licensed and able to write those policies for you to be able to get them. It's
Okay.
not something you can buy online. You have to have a financial professional to do it for you.
So is it free on charge to open it, or there is a charge that you pay?
Like any other insurance, Joshua, like the way you buy your car insurance, the way you have your, you cover your phone, or you cover your home, or you cover your health insurance, there is always a cost. There is a cost to be protected, because if you get sick today and you paid $1 million, it's not going to come free of charge. There is a cost that is called the premium that you pay to be able to get a coverage.
All right, thank you so much.
You are most welcome. Thank you. That is why we are here to learn. I see we have another question actually in the chat. Dr. Shawn says, what is the biggest misunderstanding or myth you hear about life insurance from people in our community? Has anyone ever regretted not getting covered sooner? Yes. So this misconception really, people never think that what happens to others can actually happen to them. People tend to think that I am young, I am healthy, life insurance is expensive, life insurance is for the wealthy, it's not for me. So that is why actually we are here, to educate people about how much does it cost. Who actually needs it is everyone. We always say anyone who actually depends on anyone's income to survive. If you depend on your income to pay rent, if you depend on your income to eat, if you depend on your income to go to school, then you need the life insurance because you don't know when you can be sick and you're not able to go to work and that check actually stops. And if you have a family that depends on you for survival, for rent, for mortgage, for college education, you as a parent, you need that life insurance. So the misconception is people always think, is that thing, had I known? Yes, we have had people who get sick and they cannot actually be able to get approved. So people think that I can wake up anytime and get a life insurance. That is not actually correct, because there are what we call, actually you have to be able to qualify for that. If you get sick, a chronic or a terminal illness, you cannot actually qualify for life insurance. So the better you do it is today, because you never know what your tomorrow is going to be. I might be healthy today, young today, but I don't know what my tomorrow will bring. So then that misconception of saying I'm young, I'm healthy. We have seen young people getting sick. We have seen young people get actually dying. We have seen healthy people getting out tomorrow and get into a car crash and they can't walk again. So yes, we have seen people regretting because they cannot qualify now. They lost the insurability, the ability to be able to be insured because they are sick today. But had they done it last year, they would have actually been approved. Thank you for that great question, Sharon. Oh, okay. So I see another question from Victor. Can you withdraw funds from your life insurance policy in case of emergency? And what are the potential implications? Victor, yes. This is actually the beauty of life insurance, the beauty of Index Universal Life. So the Index Universal Life, it has actually two components. It has what we call the protection part and the accumulation part. The protection part, that is the life insurance that protects you when you get sick, critical, terminal, chronic. You're not able to perform any of the two, you can't bathe yourself, you can't help yourself to eat, you can't walk by yourself. If you have a $1 million protection, you access the protection part, which is life insurance. And then we have the accumulation part, whereby you actually accumulate your cash, your savings. As long as you have money in your cash cylinder, you can actually access your money at any time. The cash accumulation, you don't have to be sick, you don't have to die. It is your cash, you take it out. It's easier than other actually saving vehicles. Like for example, if you have like a 401k, you cannot actually take money out of a 401k, even if you have $1 million policy in there. If you try to take out money out of a 401k fund before the retirement age, you're going to be hit by a 20% penalty. But the beauty of Index Universal Life, you can actually take your money at any time as long as you have the savings there. That was a brilliant question, Victor. Thank you for that. Okay.
Hello.
Hello.
ya nanjye ndumva wansobanura kuri icyo kintu bari babajije nyine cya 401k 401k itandukaniye nyine na saving insurance.
Okay, perfect. Ninde uri kuvuga?
Vincent.
Vincent, thank you. Okay. So urimo kubaza itandukanizo rya 401k. Team, you help me here. We actually speak different languages to make sure that our community understands. So I'm going to help Vincent understand the difference actually between the 401k and index universal life, if we may. So Vincent,
Yes.
401k,
Yes.
401k ni amafaranga tubika cyangwa amadolari tubika tubika y'amasaziro cyangwa retirement
Yes.
dukoramo.
Yes.
Ni ukuvuga ngo ushobora kuba nkora muri company muri Amazon for example.
Yes.
Nkaba ibyo bita ushobora kuvuga ngo ndasevinga maybe 4%, 4%, Amazon nayo ikamakinga wenda 4% cyangwa 5%. Ni ukuvuga ngo iyo mbashije gusevinga wenda ubwo baransevingira nkayabika, ariko amafaranga amadolari dushyira muri 401k babyita ngo ni pre-tax, ntabwo dukuraho imisoro mbere yuko tuyashyiramo. Bivuze ngo niba ushyizeho 200, niba ushyiraho 500 buri kuya kuri paycheck, byose arajyamo, ariko igihe uzajya kuyakurayo nibwo bazayatakisa.
Okay.
Kandi taxation hano ukuntu ikora, ukuntu batakisa hano, ni ukuvuga ngo buri bitewe n'amafaranga n'amadolari wakoreye, niba uri ku bihumbi 100 bari ku 500, ntabwo mutanga imisoro ingana. Rero ibyo bita tax bracket, icyiciro cy'imisoro mutanga. Ni ukuvuga ngo niba warakoze utangiye gukora uri mutoya ukabika nk'ibihumbi byawe 500, ukazajya kuyakura maze kugera mu masaziro, uzaba ugeze nko kuri tax bracket wenda ya 40%. Ni ukuvuga ngo niba ufite ibihumbi 500 byawe wibikiye, bazatwara umusoro wa 40%. Bivuze ngo wavuga guti mfite 500, njyewe meze neza nta kibazo mfite, ariko ugiye kugerayo usanze hafi igice cyayo wabitse buri yatwaye.
Okay.
Babitse ibyo bita pre-tax, ntabwo bakuyeho imisoro mbere yo kubakubikira. Ikindi amadolari yawe ari muri 401k ntiwayakure kugira ikindi wakoresha na kimwe, keretse wageze mu myaka y'izabukuru.
Yes.
Noneho iyi index universal life cyangwa life insurance twita index universal life ushobora gusevingamo, ni ukuvuga ngo ifite ibice bibiri. Ifite igice cyo gufasha ugize ikibazo, iyo bita protection cyangwa se life insurance.
Yes.
Agira ikindi gice kigufasha kubika. Ni ukuvuga ngo ya life insurance cyangwa aguproteja, iyo urwaye barayaguha, wakwitaba Imana bakayaha umuryango wawe. Cya gice kindi cyo bita cash accumulation, naho ni ukuvuga ngo niba utanga amadolari 400 ku kwezi, bafasha gufata nka 200 akaba cost ya insurance yawe iguproteja, 200 bakajya bayakubikira buri gihe cyose akajya muri ya cash accumulation. Igihe cyose avuga uti ngeje 200 hariya cyangwa 100, ndashaka 50,000, uyakureyo kuyakoresha nta kibazo. Ntabwo rero ngo Vincent afite imyaka 50, 60, anytime uyafiteho. Ni ukuvuga ngo ufite access, ibyo bita liquidity, ufite access ku madolari yawe ari muri account value yawe igihe cyose uyifurije. Aho muri 401k ugomba gutegereza ko uzajya mu zabukuru.
Ugomba gutegereza ko uzajya mu zabukuru.
Iyo niyo differa nini hari rwose. Ikindi, aya madolari dufite muri 401k ari stock market. Ubu mpamvu ujye wumva umuntu akakubwira ngo ngo muri covid ngo narahombye, ngo nahombye 401k nge narayihombye. Kubera ko niba ari muri market isoko ryaguye, wabitse yo yaragwa.
Yes, birumvikana.
Ari muri life insurance cyangwa muri index universal life, afite ibyo bita floor rate. Ni ukuvuga ngo afite garanti ko niba ugejeje 200,000, nubwo isoko ryamanuka rikajya muri negative 20, yari ntabwo azigera akorwaho, ari protege.
Uri kubyumva ariko?
Ntabwo uzigera na rimwe uhomba ayawe ufite yo na rimwe.
Mbese urebye ni nkaho aba ari banke, ni nkaho warakoze banke broke.
Ahubwo warikoreye banki, ni banki broke. Niko njya nkunda kubwira abantu, icyo bivuze neza, ni banki broke yawe. Ni ukuvuga ngo ntanga amadolari 400 ku kwezi, ndi poroteje kandi ndanabikirwa yo kuzakoresha mu zabukuru cyangwa aho zashakira hose. Ngize ikibazo ndashaka kwishyura inzu yanjye, ndashaka gushyira umwana mu ishuri, nyakureyo nkayakoresha. Noneho ku bana batoya ushobora kuvuga uti umwana wanjye ni batoya kambashyireyo nonaha kugira ngo nujya kujya muri universite nzabe mfite yo kubatangirira. Ibyo byose birashoboka kuko iyo ushatse kuyakurayo barayaguha aho ushakiye hose.
ni ukuvuga nyine wandikaho ko ari ay'umwana igihe azagera ku ishuri uzayafata, nangwa se ni anytime ushaka gufata ayo mafaranga nta mupaka uyafiteho.
Nta mupaka uyafiteho kuko nta gihe baguha cyo kuyakurayo.
Okay.
Aho uyafitiyeyo waramaze kuyakimura, mbese kuyagwizamo, ayo ugwije ayo ufitemo niyo ukuramo, nta kibazo, nta mupaka uhari.
Okay.
Yeah. Good question, good question. So here, for those who didn't understand, Vincent was asking the difference between 401k and IUL. For example, if he needed to have money in a 401k or an IUL, what are the implications if he needed to take money out, for example? So I was trying to explain the difference. The 401k is actually a retirement vehicle whereby you contribute your money where you work, and your employer will also actually contribute for you. That money goes in pre-tax, untaxed, meaning that by the time you put the money, it's not taxed. When you go to take out the money during retirement, it is going to be taxed, actually on a higher tax bracket, because depending on how much you have there, the actual IRS is going to determine which tax bracket you're going to be paying. You might have 500,000. You find yourself on a tax bracket of 40%, meaning that you're going to lose your nest egg, your retirement benefit by 40% towards the tax. Another thing with 401k, you cannot take out the money to use it at any time you want until you get the retirement age. If you want to access the money before retirement age, you're going to be hit by actually by a tax. You're going to be hit by a tax, or like they actually penalize you, a penalty of 20%, even or more, for taking all your money before the tax. And even then, you're going to pay tax. And something else I was explaining to Vincent, with Index Universal Life, you have two worlds in one account. You have the protection, which is life insurance. You have cash accumulation. With the protection, when you get sick, you take your money tax-free. You die, you take your money tax-free. You get sick, you take living benefits tax-free. And your cash accumulation, it is liquid. You can take it out at any time you want. There is no age limit and there is no restriction. Literally, that's how it was. Thank you, Vincent. That was a great question. All right. So again, these discussions are always recorded. We do have a YouTube link. If anyone has a YouTube link closer, please, you can drop it in the chat for me. So we record everything. Every Thursday, we tackle a different topic. We call upon our communities. This is a free event. This is a free training event for us to learn together. We gain so many insights when we learn together. So we call upon you. Always come join us. It's a free training. In this country, it's rare for you to find a discussion like this that is free. But for us, we have this always. It is a community drive. It is the crusade we have to educate ourselves, to educate one another, to educate our communities, to live a free society and lives. So every Thursday, again, 8 p.m. Central Time, we come here, we tackle different topics. And if you do have actually a topic that you'd want us to tackle, we are always open to tackle that particular topic you want to learn more. Igihe cyose twiga kuwa kane twigira hamwe, abifuza kumenya ibintu bitandukanye bijyanye n'ubumenyi bw'imitungo, dukora twiga ibintu bitandukanye buri wa kane, 2:00 z'ijoro amasaha ya Texas. Ni ubuntu, watumira bagenzi bawe, kandi ibiganiro byose biba bibitse. Wabyifuza n'ibyo twakoze ahahise, yatwandikira tukaza kubasha kubimugezaho. Nanone nabereka washaka kuza kuduhamagara, telefoni ni 817 808 45 icyenda karindwi. Again, for anyone who needs the recording and you're not maybe on our mailing list, you can reach out to 817-808-4597. The email is going to be ibfinancialfreedom@gmail.com. We'll be happy to give you even the recordings we did previously. So this, I think, marks the end of our discussion. Thank you once again for joining us tonight. We always look forward to having you on Thursday to learn together, to gain more insights together. Have a great night, and thank you for being with us tonight.